All right, welcome everyone to another episode of Daily Rates with the Mortgage Calculator. We are a licensed lender and broker in over 20 states. And myself, I'm president of the Mortgage Calculator, but any of our loan officers would be happy to send a full breakdown on any of our options that we go over today. So what we'll do on the show, we'll check out the markets in general, see what the markets are doing on rates, and then we'll do a quick check-in on all of our standard programs, and then we'll deep dive into our topic for the show, our non-QM 40-year mortgages. So extended period mortgages are definitely a hot topic in the news, but our non-QM options, we've always had a 40-year option, and I'll show a few of the most popular versions of that here in a moment. So let's go ahead and switch my screen here, and we will get started with reviewing the rates today. So typically what we want to check out when we're talking about rates is the 10-year Treasury. Definitely one of the best indicators of rates overall, especially when we're comparing multiple programs. So here you can see pretty good news over the last 5 days is our look back period here. Definitely some momentum in the downward direction is good for us. But we always want to put this into perspective as well and just let everybody know out here we're still at 1 year and even in most cases 3-year lows for mortgage rates across the board. So definitely a great time to be looking to get a new home. And now let's check out our live rates for our most common programs here. So on our live rates page on our website, you can compare dozens of different loan program options. And we always set up a standard scenario, a single family home, 500,000 purchase, 300,000 loan amount, corresponds to 60% loan to value. We always set a 760 estimated credit score and an estimated 40% debt to income ratio. That way we can compare all the loan program options side by side across all the different options, even commercial, etc. So here, our first most common option, when most people think of a mortgage, a conventional mortgage, 30-year fixed. Rates come in today as low as 5.5%, pretty amazing. Final APR there, 5.766. We love the recent rates here as they continue to go down. And if our customer doesn't qualify for a conventional option, the next best option is typically an FHA option, which allows more leniency on credit issues, a higher debt to income ratio, but does have additional costs with upfront and yearly mortgage insurance. FHA comes in today, a lower rate, 5.125, but with those additional costs there, final APR comes in at 6.017. So we always want to use APR to compare. And you can see here FHA is a little more spendy than conventional, which is typical. And our VA options for eligible vets, active service members, surviving spouses. VA programs are amazing. Rates today as low as 5.125 there, but much lower fees. Final APR comes in at 5.373. Much lower fees than any of our options there, FHA or conventional. So typically the best option for our eligible borrowers. And as we move down here to USDA, for properties in those USDA rural areas of the country, USDA is a great option to compare, and we love to see the fours. Fours are coming back. Absolutely amazing. 4.99, lowest rate option there. And the final APR with all the fees included comes in at 5.688. So that's a touch lower than FHA or conventional if our borrower is looking in those areas. So USDA could be the best option for those borrowers. And our topic for today and some of our favorite options here at the Mortgage Calculator are non-QM options. So non-QM are the options that go beyond the standard conventional and agency and government options. And we're able to use alternative docs such as bank statements, 1099s, P&L statements, all kinds of different options here. So if our customer doesn't qualify for a conventional or FHA or other full doc option, many times our self-employed borrowers are the ones that need a little bit of help there. And instead of using a full doc, tax returns, etc., they can use alternative docs, bank statements, and now qualify. So our non-QM options for a standard 30-year fixed primary home come in as low as 6% rate. Final APR 6.272. Hopefully we see that come down a little bit more here as the rates continue to fall. And notice it's just a touch higher than conventional. So we can flip to our alternative doc option for very similar pricing there. And we have our alt doc options for investment properties. Rates come in today 6.125 for a standard 30-year fixed. Final APR 6.448. And we want to compare that to the conventional options for an investment property. Almost identical, 6.125 rate, same rate. Final APR 6.438 as usual there, just a touch cheaper. And our DSCR option. So woohoo, finally some changes here. So we continue to drop rates here. And you can see our DSCR option here for standard 30-year fixed with a 3-year prepayment penalty. That is our option for rental properties with no income or employment. We simply use the rents to determine a DSCR ratio. So if the estimated rents exceed the expenses there of the PITIA, aka the property cash flows, that's a ratio over 1, which is what we use for these scenarios. So our standard 1.00 ratio DSCR with a 3-year prepay comes in today, 5.875. We love to see that go down. Final APR there, 6.193, which beats conventional. Alt doc, absolutely amazing to use DSCR and beat those typical options. And we can add a 5-year prepay to sweeten the deal a little bit here. Rates as low as 5.875. Hopefully that goes down here in the next couple days. That final APR there, a little bit lower, 6.145 when we add the 5-year prepayment penalty. So even lower than the 3-year. And we do have options for no prepayment penalty. That comes in at 6.125. Final APR 6.448. Some states don't allow a prepayment penalty. Some borrowers don't want one. We have other options for second mortgages, fix and flip, one-time close, other commercial type deals, all kinds of different options here as you scroll down, and even our topic for today, the 40-year options. So today we'll be discussing our standard, if you want to call them standard, non-QM 40-year options, 40-year fixed, 40-year interest only. Definitely options that we have here on the live rates page if you scroll down. But let's actually go into a specific example. So this is a home that's for sale in my area. I just wanted to grab a nice home. It's a great example here. It is a home that someone will want to purchase perhaps as a primary home, but also would be a good rental property as well. So we're going to look at both options. And you see here the price of $1.375 million exceeds what would be typically possible with a conventional option for low down payment. So this is an option where we're already going to exceed the conventional limits, already be looking at probably a jumbo or a non-QM option. And now this would be a perfect opportunity to compare and explore the 40-year options. First up, I have an option using our 40-year fixed option. Full documentation for a primary home. So this is full doc, like a standard conventional loan. However, these are our non-QM options. And for our non-QM options, we can go as low as 10% down. And this is going to be for that specific example that we already pulled up. A couple of caveats here. Non-QM loans never have PMI, so that's a great consideration there. And a 10% down is the lowest down option, but a 20% down payment would be more standard and significantly lower the rates and costs, but we typically get requested for the lowest down payment option. So now let's actually look at the rates for this scenario. You see here we have a rate as low as 7.00 today. That costs 2.125 discount points of cost. And we even have an option with a rate of 7.75 that gives us a little bit of lender credit, which is pretty cool there. 0.25 credit towards some of our closing costs. And you can see here, this was a 10% down payment option. And you can see the loan amount is 1.2375 million there. So exceeds the typical conventional FHA, government, other types of options. And you can see the other settings here. We have 90% LTV. We have full doc as our documentation type. And 40-year term. And credit score there that we always use for our estimates here of 760. So this is a great option for our borrower that wants to have a little bit lower monthly payment, may need a little bit of help qualifying. So obviously we can lower that payment. When we're talking about DSCR was our topic on the last show. We're going to improve the DSCR, but in the same way for a full doc loan, lowering that monthly payment would lower the DTI for qualification purposes as well. And now let's get into our second option here. So if our primary home borrower that wanted to move into this house needed to use bank statements. So if we need to use 12 months, bank statements is actually a personal bank statement. So it's 12 months personal bank statements for a self-employed borrower, someone that's maybe a sole proprietor. We can still do 10% down for this exact example. Pretty amazing. So 40-year fixed, 10% down, 12-month personal bank statements, no PMI. pretty amazing options. And as before, I noted here that with a 20% down payment, we'd be able to get much lower rates, but this is our most common request. So here you can see the rates are a little bit higher to use bank statements as income. And our lowest rate option, 7.25 rate, has a 2.35 discount point in cost. And the payment is a little touch higher than it was on the full doc option. But if our borrower can't use full docs, this is still pretty amazing, almost identical. And an 8% rate doesn't have a lender credit, but it does have a par rate there, no cost to that 8% rate. And again, this is 10% down. All the other items are set the same, except we switched up the loan type here to a 12-month personal bank statement, but everything else is the same. And now, obviously, we can do investment property. So if our borrower wanted to do full doc or bank statement options for investment properties, they could, but that would take forever to show all the different options. But our most common investor request is going to be our DSCR, which doesn't require any income or employment. We're simply going to use the estimated rents from the property. So as I mentioned before, when we're using DSCR to qualify, using the DSCR ratio, we can lower the monthly payment here. So this is our, let me start with this option here. So our DSCR option, 40-year fixed, we have an interest-only option we'll talk about here in a second. Lets us go pretty amazing 15% down, and we did set a 5-year prepayment penalty on this DSCR option. So we can still get to that is our lowest down payment, 85% LTV or 15% down. That's our lowest option for any DSCR, but it's pretty amazing. We can switch to a 40-year amortization and still get that 15% down option. So here we were getting some amazing rates as well. So for an investment property, this is pretty amazing. We actually have lower rate options than our primary, but that's because we're adding a prepayment penalty. So 6.875 rate, lowest rate option, 3.475 discount points in cost there. And you can see here we have an option with a lender credit, 7.75 rate has 0.025 lender credit, just a little bit there. But remember, the goal here for DSCR, just like it is for our customer that wants to use a 40-year option, is going to be to lower that monthly payment. So in this option here, we put that 15% down, still have a nice hefty loan amount there, which also still exceeds the conventional limits. And this was our DSCR option with a 5-year prepayment penalty, 85% loan to value. And the final option we want to go over is when we flip this to interest only, which increases the cash flow even more, increases the DSCR ratio even more if that is an issue here. So 40-year interest only, DSCR, 20% down. We can't do the 15% down option here. And it still has that 5-year prepayment penalty. So with our 40-year interest only option, it's going to have interest only for the first 10 years and then go to a standard 30-year fixed with an overall term of 40 years. And our options here, absolutely amazing because we put a little more down. We have an option as low as 6% rate, pretty amazing there, 1.95 discount points and costs on that option. And a 6.75 rate has a lender credit of 0.525 towards closing costs. And you can see how low we got this monthly payment because we put a little bit more down. We're going interest only. And you can see how that could improve the ratio substantially here. So another reason we choose these amortization periods or switch to interest only. You can see here we get this same home at a $5,500 monthly payment compared to, in this option, a $7,157 option payment. And of course, if we did a standard 30-year fixed, it would be a little bit higher even. So definitely accomplishing the goal here using the longer amortization or using the longer amortization combined with the interest only is the ultimate use there to maximize cash flow for our investors. So that's a great option. Hopefully that is helpful for our customers out there that have heard all the news, maybe interested in some of these options at longer amortizations. And we can compare those. We can also quote you the 30-year fixed and the 40-year side by side. So please reach out to any of our team members, drop a comment here, or go to our website, themortgagecalculator.com, and we'd be happy to help you out. So thanks everybody for joining us. We'll be back later this week with another episode of Daily Rates Live. Have a great day.